The National Investor's motto is, you can get information anywhere, but here you get knowledge. And for well over 40 years now, Chris Temple has imparted that knowledge, an unparalleled, understandable, and useful take on the big picture of the markets and of our world. He has been out in front of what you see on the news every day on many themes. More, Chris has taken this macro knowledge and his unique analytical abilities to uncover unique investment opportunities. Often he has guided his members to big winners in resources, biotech stocks, and more. His talents and connections often getting him into ground floor opportunities before they are discovered. Without further ado, here is Chris with today's topic.
Welcome back. Today you're going to get kind of a twofer, you might call it. First off, I'm going to be joined in a minute by my old friend, Rudi Fronk, who is the chairman, co-founder, and CEO of Seabridge Gold, which you'll find on the Toronto Exchange under the symbol SEA and on the New York Stock Exchange under the symbol SA. It's a company that just celebrated a quarter century last year. And as I've said many times, it is, of all the companies I've ever seen or looked at or recommended, it's at the top of the list as to one you should have as a core holding in your own portfolio if you're even half bullish long term on gold especially, but also on copper. Now, before I bring Rudi on to talk about the company and a couple of key updates, number one, but also the second part of our twofer, we're going to dive into the gold market more generally and give our pithy opinions and some observations on why we've had this record run in gold and why it's not remotely over with. Before we do that, the usual preliminary here on a screen, Rudi and or myself, where it concerns Seabridge Gold especially, might be making forward-looking statements, so be aware that we're very much talking not just our opinions, but our book here, so to speak. Be mindful of that. But that said, those of you who have followed me for any length of time and or know of Seabridge independently from that know that this is a company that has got several high-profile, in a few cases, very advanced assets. The biggest one, of course, being the flagship KSM project in British Columbia, that for any other company would, any one of these could be a major flagship asset. And here you've got several rolled up into one company. As you'll hear Rudi say later on, for every share of Seabridge Gold that today is worth roughly $15 US per share in the market as we're making a turn toward the second half of 2025. When you add up all of the resources, gold, molybdenum, copper, silver, there's well over $9,000 in gross value per share in the ground already drilled for every $15 some odd share of Seabridge. It's just mind-blowing. And he'll give you a few other mind-blowing stats when we get that far as well, including that, not the least of which is that the pre-feasibility study for KSM from just a few years ago that contemplated $1,700 and some gold, a lower copper price as well. If you looked at the $8 billion net present value of that from just a few years ago and looked at it in today's metal prices, you can triple pretty much that number. It's just remarkable how undervalued Seabridge is. Not that that makes them unique among companies necessarily, because it's well known that the mining stocks, generally speaking, have not kept up with the gold price run itself for a lot of reasons. And what I've said many times is that the biggest of those reasons is that too many other things are still working for generalist investors. And so they're still busy with the NVIDIAs of the world and the AI stocks of the world and the cryptocurrencies and even a broad market, which despite a lot of reasons why it shouldn't, those don't matter, right? At least at the moment. We've hit new nominal highs again just this week on the S&P and on the NASDAQ as well. What is especially in the last year rendered Seabridge an even more ridiculously underpriced equity. As you see on this chart here, last summer, there was what I basically call a nuisance suit filed against the company. In fact, I think it's two of them technically, by one of the smaller First Nations groups in the area around KSM in British Columbia. Their challenge basically is that the government, in granting Seabridge what is called substantially started designation for KSM did not consult them sufficiently. It's nonsense. Uh, Seabridge certainly says it is. Even before Seabridge's own official response in court about a month or so ago, the province itself responded as to how, if anything, the company and the province both bent over backwards to make sure everybody had a say in on this. And it's notable that this one particular First Nation band, the smallest of the ones to be that are part of this whole thing, they're the only one that has a problem with this. Everybody else wants to see this thing go forward, and so that caused the lion's share of that drop in a share price you see from last year, and it's recovered a bit somewhat as interest in the mining stocks has perked up a little bit, but still nowhere near what it was even then, let alone when you consider how much higher Seabridge should be now compared to what it was last summer, given the higher gold price and all of the other things here. So you're looking at a stock again that should be a core part of your portfolio. It's relative to the story and how the story has improved in recent years. It's the most absurd, I think, price setup here for Seabridge anybody can remember when you look at the recent lows. So you're going to get an update on a couple of key things, including drilling that's underway now at what could be a location that will host the next KSM-like target. We all hope. I'll have Rudi weigh in on that. And then he and I are going to give again our opinions on the gold market generally and our view that this bull market is still very much in its early stages. And here is my old friend Rudi Fronk. Rudi, it's good to see you as always.
Same here, Chris. Great to be on the screen with you.
Well, as I said before you came on, this is one of the best stories out there in not only gold, but in copper. Seabridge Gold, if you're even half bullish long term on gold, should be an anchor of your portfolio. I followed the company almost since its inception. And we're going to get into a couple of updates, as I promised, on the company specifically. But then, as part of my mid-year kind of lap around several different sectors, Rudi and I are going to go on and really have some fun and talk about all things gold generally and about how we see the world evolving and the gold market evolving. But before we do that, really just a couple of things quick to update folks. You announced not long ago that Seabridge had filed its own answers. This is following the province's own answer, the government's answer to these nuisance suits against the companies that were challenging your substantially started designation. It should be an open and shut case, I think, when we get to the court date in September. But give us just the main points that you made about that, Rudi.
Well, the two petitions were claiming two things. Number one, that this Tisawat-Skikamaha First Nation were not properly consulted during the substantially started process, and that secondly, the government was unreasonable in granting us the designation that they did grant us this past July. So in the government's response and our response, we made it very clear and pointed out exactly the consultation process we went through with not just the Tisawat-Skikamaha, but all the First Nations in the region, to show that, quite honestly, we bent over backwards, accommodating their questions, their requests, and keeping them up to speed and in the process. And then to state that the government is unreasonable, I mean, we spent over $400 million on early site construction activities to get this designation, more than any other company has ever spent that got the designation, and also spent this money and had the support of all the other First Nations, the Tahltan Nation, the Niska Nation, the Gitxsan Nation, and all the local communities that are impacted by the project, asking the government to grant us the designation in support of our application. So I think someone that wants to go in and read the petitions in terms of the allegations and how we responded to them along with the government can't walk away with anything other than this is a nuisance suit.
Well, for sure. And I think it's a matter of time before that is finally adjudicated in your favor. We'll see what happens. You've got your court date in September coming up, and then however many months it takes after that for decision. That's not in our hands, of course. But meanwhile, work continues. You guys have not sat on your laurels or waiting for this to happen, but you've continued to make sure you've got solidified your status. And remind us too, And again, I referred earlier before you came on to a conversation of a few months ago where you articulated this, but you wanted to make sure as well that you continue to spend the money and do what needs to be done to be right at the development stage doorstep. And tell us again, remind me how you made sure that you're first in line for hydropower.
Well, that's such a huge plus for KSM. The ability to buy power off the grid on a grid that runs right next to the project, and that power being all sourced by hydro sources, so it's inexpensive and green power. We've secured with BC Hydro now from the Northwest Transmission Line 245 megawatts of power from that line. To ensure that that power remains ours, is we actually signed a facilities agreement with them, and they are now building our switching station right at the line that'll tie into our project, which ensures that the power comes directly to our project.
Cool. So again, we just wait for this court thing to get out of the way. But you also mentioned earlier this year that one of your strategic investors in your most recent financing is one of potentially several people waiting in the wings to step up when the time comes on KSM.
Yeah, it's frustrating that we can't identify who that strategic investor is. I think if we did, the world would say, "Oh, okay, I
Yeah.
guess they are going to move this project forward." But look, that'll happen in time. We are working closely with them and still engaged with a few others, ensuring that the work we're doing this year, which basically leads us to the point where we can press the button on starting a final feasibility study by the end of the year, all that work will be done by then. So we are working diligently with this strategic investor to advance the project to be able to press the button on final feasibility.
And with everything still going forward, it just underscores the fact that Seabridge shares right now are woefully undervalued. I was going to save this for later, but and we'll probably still talk generally about the disconnect, Rudy, between metals prices and still the broad universe of mining stocks, be they exploration companies, even some of the producers. But when you did the PFS, pre-feasibility study, on KSM most recently, it showed with the gold production, with copper that would come, a net present value of $8 billion, but that was with the gold price scarcely over half of what it is in the market right now. And tell me again, I mean, 8 billion was the official number. Tell me again what the NPV would be if we use today's gold and copper prices.
Yeah, so we have a slide in our presentation just to kind of show the impact of today's metal prices compared to when we did the PFS in 2022. And the NPV after-tax NPV jumps from 8 billion to almost $24 billion.
Wow, that's wild. Just absolutely wild. And look, we can quibble about what we think things might be in 3 or 4 or 5 years, but as you and I are going to talk about shortly, the bullish case for gold is really just evolving further. I mean, I can't see that we're anywhere near the end of this move for a host of reasons. But before we get into that, I want to talk about, KSM is your flagship project. Great project, world-class copper and gold, both some of the biggest reserves on the planet. But you've got several other, as I said before you came on, projects that for a lot of smaller companies would be their flagship. One of them is Iskut, and you started drilling just a few weeks ago at the Snip North target. Tell us about that because I know that you've commented before that you think that you can have one or more lookalikes of KSM at this project. It's not all that far from KSM to begin with.
It's only about 30 kilometers as the crow flies. We bought Iskut in 2016. Gold had really made a bottom just before that in 2015 at $1,000 after being at 1900, and it created the kind of market environment that we like to buy assets because things are cheap. So we went out, looked at the universe of available projects, and bought this public company called Snip Gold that owned 100% of Iskut, with the view that Iskut could be another KSM in terms of date of mineralization, style of mineralization. Um, there was gold and copper porphyries already identified there in terms of opportunities. And so we've assessed the opportunities over the past few years. Last year, we hit a big deposit called Snip North, where we had intersections from surface of 100 to 300 to 400 meters of continuous mineralization of gold and copper at grades that are very similar to what we have at KSM. And this year, we're now going in with our first large drill program to quantify a resource at Snip North. and we expect it to be a big deposit with lots of gold and copper.
That'll be fun. I can't wait to see what that's all about once you get the drill results in. So let's move on from that. I want to spend some time talking about the gold market generally, the universe of gold equities generally, how you see things evolving. Obviously, I've got my opinions too, and for the most part, our opinions kind of are mashed together and almost indistinguishable, I think, from one to the other. But your co-founder of Seabridge, Jim Anthony, did a slide presentation, and I had to chuckle when you sent it to me. And I looked at it. This is not your father's gold market. He likes that title just like I do.
Yeah, no, it's very different than any gold market we've seen in the past several decades.
Well, and the first thing I want to say is this, and open up to you because here's one of the ways in which it's different. When I was in New York back in May for the SME conference, the Critical Trends in Mining Finance. We had a bunch of us gathered together at a dinner party afterward, put on by our mutual friend Laura Stein. She always does that at these New York conferences. And Jay Taylor, who I'm sure you know, and I were kind of the anchors of an impromptu little workshop after dinner. And the theme was basically on the end of financial repression. And that was when, if you remember, Rudy, the Japanese bond market was starting to come unglued. Even the most manipulated sovereign debt market in the world, they can't manipulate it that easily anymore because the numbers are just getting too big. The debts are too big. They can't keep interest rates. It's like that old proverb about trying to keep a beach ball underwater. You can only do it for so long. And here in the U.S. Treasuries, people saw something recently that got a lot of chatter when all of a sudden, when the bombs started flying between Israel and Iran, guess what didn't rally? Was the Treasury market. You actually saw yields move higher. And that's not supposed to happen, but it seems like we're at the end game for funny money, and that's been benefiting gold.
Yeah, I mean, it's quite interesting. So gold has now re-entered in a meaningful way the global financial system.
Yeah.
It used to be in there. I mean, when Bretton Woods was formed in 1944, gold was front and center with the US dollar convertible into gold. It was completely shut out of the system in 1971 when Nixon shut the gold window, which allowed governments to go out and create huge amounts of debt, implode their money supply. So since 1971, the credit market debt globally has grown from 398 billion to 102 trillion today, a 256 times increase. M2 money supply in the US has gone from 650 billion to 21.5 trillion, a 33 times increase, and nominal GDP grew from 1.16 trillion to 30 trillion at 26 times. So we have all this debt out there that's not supported by real assets, and
Supported by air.
supported by air. That's right. Uh, I mean, and the rest of the world is recognizing that this is not sustainable in the U.S. I believe that over time that the long rates will start to go a lot higher because the U.S. could just have to continue to borrow, even without these this beautiful new plan that Trump just put out there. We're still looking at $2 trillion deficits plus year in and year out into the foreseeable future. At the same time, the Treasury has to basically roll over, I think, this coming year, $9 trillion of
Yep.
debt that they have to resell at rates that are going to be much higher than when they put the debt in place. So the interest component of the debt is going to go bigger, which then makes the deficits even bigger. I mean, at some point, it's over. And I
Well,
think the rest of the world is sniffing this out.
Well, it is, and I mean, it's not so much that we're that worse off than everybody else. Everybody on the planet, unlike in the 70s when debauching the dollar and driving inflation higher, when gold had its first big run from, $35 all the way up to briefly over 800. That was uniquely the U.S. that was screwing up its finances then. Today, everybody does it. I mean, China's got the biggest debt to GDP ratio in the world, ironically, in full-blown deflation in their economy, which is a whole different subject for another day. But, I had to chuckle the other day when Caroline Levitt, who is the president's press secretary, was out and she was reading his list that he had reportedly just sent to Fed Chairman Powell of all of these countries that had lower interest rates than the U.S. And my wife and I are sitting watching this. I said, well, the part she's not saying is if you add them all up and multiply them by two, they don't have the total debt that the U.S. has. And that's the thing that people need to remember. It's not that the U.S. can't, quote, pay its debt, but it's going to be serviced with cheaper dollars and, as you said, much higher interest rates. The market's going to, the Treasury's going to have to pay what the market will bear, at least
Yeah.
until they try yield curve control. Then we're really in trouble because the math doesn't work for that.
Yeah, unless the Treasury continues to do what we call payday loans, going
Right.
out at the shortest duration to raise the capital they need because it's the lowest interest rate. But at some point, the whole thing blows up.
You know, it's
And
interesting. It's interesting when you go back and look where all this started in 1971, because I have said many times that the president in our lifetimes, Rudy, that had the worst bum rap was Jimmy Carter, because he's blamed by history to this day for the high inflation, the high interest rates, et cetera, stagflation of the 70s. He didn't have anything to do with starting it. Richard Nixon taking us off the gold standard and
sure.
unleashing Arthur Burns on the world, his Fed chairman. That's where it all started. I mean, this die was already cast by the time that Carter was sworn in. And to some extent, that's also true right now with Trump 2.0. I said this before even the election last fall, that the math that President Trump is going to face is just onerous.
Yeah, it's amazing. So, we like to talk about gold quite a bit as a company. We provide a lot of updates on the gold market and our views. At last week's annual meeting of shareholders, Jim Anthony made a presentation, the slides you're referring to,
Mhm.
that you can see on our website. A year ago at the AGM, Jim predicted a gold price north of 3,000 when gold was well under 2,000. He got that one right. Last week, he predicted a $12,000 gold price in the next 3 to 5 years. So someone, okay, 3 to 5 years. What about in a year? And he said 5,000. I mean, we think the die is cast for gold prices to go much higher. The rest of the world is buying gold, central banks, sovereign wealth funds, family offices, as a way of getting out of the dollar.
Yeah.
Yeah, unfortunately, they don't buy mining stocks. They're buying physical gold. And that's, I think, a big reason why you have this disconnect between the gold price and the price of gold mining companies.
Well, when we go back to the last major peak that did bring along in a big way the equities with it, it was early in 2011 that the equities peaked. And it was a few months ahead of the actual gold peak itself, which was in the early fall when the gold price in US dollars was a little over 1900. But one of the things I've said, and you and I were talking about this before we recorded this, Rudy, is that back in 2009 and 10 and in the early 2011, you had this massive monetary easing as a response to the financial crisis. We learned the term quantitative easing that came into our vocabulary thanks to helicopter Ben Bernanke and all the rest of it. But initially, all of that money printing didn't have any traction in the general economy. Real estate was broken, the stock market was broken, and so by default, the disproportionate amount of all that credit creation was finding those traditional inflation hedges like precious metals and like the stocks. The difference now, I think, is that even though gold is, 1900, but we're 33, 3400 right now. We were a little over 3500 a short time ago. The gold stocks haven't kept up because this gold move has been somewhat in isolation when it comes to the mainstream investment world. Generalist investors only recently have started to make their presence known by chasing this rally, but most of this move, which is good news when you think of it long term, did not come with generalist investors. It was all the parties you named, the central banks, the sovereign wealth funds, the hedge funds, and things like that. What happens to all of these things if we get back to the environment we had in 29 and 10, and finally the broad stock market realizes and comes to grips with the fact that inflation and interest rates are here to stay, may even get worse, and that there is no magic MAGA wand that's going to give us this golden age after all, except for gold.
Yeah, you look at the large pools of capital, pension funds and others, you know, typically in the last decade or so, they probably had 2 to 3% exposure to gold, physical gold, and gold mining stocks, because
Yeah.
they're the ones that do buy stocks. Today, it's less than 1/2 of 1%. So you have gold at an all-time high because the rest of the world is buying physical gold, but you have gold mining stocks trading at multi-year lows relative to the gold price. And I think the Western investor coming back to the space, they're the ones that buy stocks. And when they come back to the space, I think you're starting to see a bit of it. Our stock has done well the last month or so. I think you're starting to see the Western investor, hey, maybe I do need some exposure to gold because maybe this U.S. fiscal situation is getting out of hand and maybe I need some protection. Even groups like Goldman Sachs and J.P. Morgan are suggesting that pools of capital actually have exposure to gold because of what they see in terms of this freight train coming right at us.
Well, and in the past, and you've heard me say this, I'm sure more than once, but when you have the light bulb go off over the head of the general markets and people that aren't already up to their eyeballs in a portfolio of mining stocks all of a sudden say, hey, maybe, when I see gold hitting new records every day, and now all of a sudden the debt situation is not getting better, it's getting worse, et cetera. Maybe I need to, be buying some gold stocks to go along with it. I've always said that when that happens, it's like a 300-pound man jumping into a kiddie-sized wading pool
Yeah.
because the universe if you take the market cap, and you may know a better statistic or up-to-date one than I do, Rudy, but how do you quantify today if you took the market cap of all of the gold companies out there? What is it?
It's less than one half of Apple, I think.
I mean, it's mind-blowing when
Yeah.
you
Yeah.
and what if everybody jumps into that all at once? I mean, look at the dollars that flow on a day into a Tesla or an Nvidia or something like that, and talk about those kind of flows into gold stocks. I mean, that'd be a rip your face off rally.
Yeah, I mean, look, when gold made that $1,900 price back in 2011, I think our stock traded up to the high 30s. It's a time when
Yeah,
investors were looking for exposure to gold, and they were buying companies like Seabridge because of the concept of optionality and leverage that we provide. When they show up again here, and they will show up again shortly again, as I think they may be starting, that's when you see companies like Seabridge really going back to where they should be. I mean, you look at our valuation today relative to, you know, uh, 2011. Um, our stock is so cheap today on any measure. One great. So if you look at KSM and Courageous Lake combined, we've got an after-tax net present value above $25 billion. Okay, our market cap today is 1.5 billion. Okay, in a normal gold equity market, development stage companies like Seabridge tend to trade at zero point 0.3 to zero point 0.4 times NAV, which means that our market cap should be, 7.5 billion to 10 billion. And here we are trading 1.5 billion.
crazy.
So there's a lot of upside to be had here once the rest of the world and buyers come back into the gold mining space. And that's when companies like Seabridge and others that are trading at low valuations today on a historic basis really start to outperform other companies.
Yeah, and a lot of it too, I think, not to belabor this particular point, but a lot of it is going to be determined, I think, too, by how much everything else holds together or doesn't. I mean, my view of the Trump administration and what my base case is that, we're not going to have a disaster necessarily, but we'll have modest but inflationary growth. I believe back last fall that compared to, let's say, if Kamala Harris and the Democrats had gotten in, the inflation rate and interest rates, you can argue, and I do, might even have been a touch lower, but we would have had a crummy economy. Here you've got a guy who is taking the traditional Republican playbook of we can grow our way out of debt and cubing it, not squaring it, cubing it, okay? And they don't care what the deficit's going to be right now. They don't care, and neither do any of the president's supporters, that the base case of all of these budget negotiations in the recent past is that we're adding $2+ trillion to the debt. They're predicting a debt of $57 to $58 trillion a decade from now. It's just turned 37. And so when people see the headlines of, well, this will add this will add that, that's from the 58. That's not from where we are right now.
I love how people throw around these numbers like they actually know what they mean. Uh, Jim Grant, who's a friend of mine and a shareholder
Right.
of Seabridge, he said to me, he said, if I give you $1 every second of every day, when do you become a millionaire? When do you become a billionaire?
Yeah.
And when do you become a trillionaire? You become a millionaire in about 10 days. You become a billionaire in 31 years. you become a trillionaire in 31,000 years, 310 centuries. But I remember Jim actually had a great cartoon on the front of his the Grand Interest Rate Observer. Two central bankers sitting in front of the Federal Reserve saying, "What comes after a trillion?"
Yeah.
I mean, these numbers that we throw around, people don't really fully comprehend what they mean.
No. No. And they're so far gone, like that chart earlier that I put up when you were talking about it, of how much faster the total debt has grown, even beyond the monetary base, let alone GDP growth over time. And
Right.
that's the problem with an open-ended fractional reserve system, is that you get to the point, which is where we're at now, where forget about ever paying off any of these debts. It's not physically or mathematically possible. But now it's at a point where can you even service all of this debt?
That's the
That's
big
where
that's
we're at. And
that's the big
that's,
question.
yeah, and that's a part of this question of whether we're really at the end game for financial repression. Look, moving on, we all can agree that gold, and you can overlap the chart of the gold price with the decline of the dollar, with the growth of debt and everything since 1971. And gold has been pretty much the top performing, or one of the top performing assets, better than real estate, better than stocks since 1971. That's going to continue the more that central banks the world over debauch their currencies, increase money, increase credit, because there is nothing else they can do except to default, and they're not going to do it. The way governments quote default is by cheap money, or would be, you know,
Default is not an option.
no,
Yeah.
that next quantitative easing program, we just add a zero.
Yep.
That's their idea of how to handle this. But let's talk about what, and I don't know if we can even talk about this in terms of an end game, Rudy. But you mentioned Jim's prediction, and I had this up also from that slide deck you mentioned of $12,000 for gold in the next 3 to 5 years. Frankly, a lot of that is just playing catch up still for the years that gold underperformed and did not keep up at various times with the growth in the monetary base and things like that. But I'll tell you how I choose to look at it, and then I want your opinion. I had somebody ask me recently, well, what is your prediction on gold near term? I said, well, I don't want to put a number on it. I think the reason I choose to look at the reasons why it's going up. And if those reasons are still in place, let alone getting stronger, then I don't want to call a top because there ain't going to be one until the circumstances change. But I was with Mike McGlone, who's a Bloomberg commodities analyst in New York. He's very bullish on gold, not very bullish on most other commodities, but very bullish on gold. His take, which I think is reasonable, although maybe I'm going to have to revise the numbers, was that we're going to see the S&P and gold this year meet at 4,000. Now that'd still be a pretty good drop for the S&P 500, not a whole lot more of a rise for gold. Maybe it's going to be a number more like 4,500 or even a little higher for all I know. But, as far as trying to pick numbers, I mean, it's really tough. But here again, do you think I'm right in saying that you just look at the factors? I mean, if all of a sudden tomorrow somebody figured out how to actually pay off this debt, or the president decided to mortgage our national parks and use some accounting gimmick that would take the sheen off, and what's out there that can possibly happen?
Well, for the government, just do some quick math here now. So Trump is talking about revaluing all
Right.
the gold held by the Federal Reserve at today's gold price. That would generate about $800 billion of value that the government could then spend and print money on. The debt today is what, 36 trillion?
37 and counting. We just hit
Yeah.
37.
So it's basically you have to basically have the gold price four times where it is today to basically balance the gold we hold with the debt we have
Hmm.
on a one for one basis. So
That'll
that's
pay
that's
that'll pay half of the next year's interest cost.
yeah, that's $12,000 gold. That's where Jim gets his number. I mean, that's
Wow.
the math is fairly straightforward. You have this
Right.
proliferation of debt and fiat currencies out there that's not underpinned by anything tangible anymore. And then gold historically was the one thing that underpinned the global financial system.
Yeah.
And then since 1971, it was removed, and now it's coming back front and center again, not just by central banks, but by sovereign wealth funds, family offices, BRICS nations. They want out of the dollar. They want to be able to trade outside the dollar system in their own currencies. And gold is finding a way into that trade system as well.
Yeah.
This this is not your father's gold market. It is very, very, very different.
Well, and as part of this whole thing too, and that's a perfect segue into this subject, Rudy. None of us alive today has ever lived and worked and made investment decisions or any other business decisions in a world that did not revolve chiefly around the United States of America as the world's hegemon, around a dollar as the world's reserve currency, etc. And what's interesting about this whole mix is that the Trump administration itself acknowledges that we are moving to a multipolar world. I almost my heart skipped a beat earlier this year, and I forget what the context was, but when Secretary of State Marco Rubio, who I always looked at as one of the biggest globalists and neoconservatives around, in a very articulate way explained how and why U.S. policy toward the rest of the world is going to change because we recognize that we are moving into a multipolar world. And we're going to try, and it hasn't happened all yet, but try and extricate ourselves from places we shouldn't be, look back closer to home. This whole idea, even though Trump has made a mockery of some of it, especially in his behavior toward Canada at times, this whole idea, nonetheless, of what Ontario's Premier Ford calls this Fortress AmCan, where we're going to have greater integration in a regional economy with the US, Canada, Mexico, et cetera. That's going to be real. And I think that's good, but the monetary implications of this are vast because we've only gotten as far as we have as an empire by the rest of the world underwriting our debt.
Yep,
And
I
what
agree.
happens when we got to do it all on our own or more on our own?
That's why I have 95% of my net worth in Seabridge common shares, because I believe that we're headed to a much higher gold price, a market where companies like Seabridge will be valued appropriately. Um, and I sleep at night as a result of that.
You know, this whole BRICS thing, I've talked about it a lot. I think some of it, frankly, in my view, is overrated as far as the BRICS having an actual reserve currency or any such thing anytime soon. I mean, the only anchor potentially for it near term would be China, which nobody wants anything to do with because they don't have a transparent system. They don't have the same rule of law that we do in the West. But that said, they've started more and more to do business bilaterally in their own currencies. The US dollar's role of daily transactions for either foreign exchange or trade is as low as it's been in a long time. And none of this means the US dollar is going away. We're not going to have it replaced by, tomorrow by a new IMF currency or Biden bucks or any of this other nonsense. But you can see the direction that things are plodding along and it's negative for the U.S. dollar, which just had its worst first half in 50 years compared to other currencies. And I mean, you can't help but be bullish on gold.
Well, I agree with you. You speaking to the choir here.
Yeah, that's true for you and I. What other angles are maybe we missing? Because every now and then I look and I wonder what is there legitimately that not some accounting sleight of hand, not trying to revalue the gold at Fort Knox. There's been these suggestions that Trump wants to unlock big tracts of national forest land and stuff like that. He actually wants forget about gold and all that. He wants to use some of this and somehow securitize it is a means to fund this cockamamie sovereign wealth fund idea. I didn't know a nation 37 trillion in debt had sovereign wealth to invest, but that's my pea brain. Well, is
Yeah.
there anything out there realistically?
I don't think so.
Yeah.
Gold has had a role in the global financial system for 6,000 years. It had periods of time it was really, probably overvalued, times it's undervalued. Right now, relative to what's going on in fiat currencies and global debt, and gold price is going a lot higher.
And for every share of Seabridge right now, as we close, that the market presently values at around $15 as we're recording this US per share. You've got how much gold?
Yeah, so we have 183 million ounces of gold in all resource categories.
Right.
We have just over 59 billion pounds of copper. We have over 900 million ounces of silver, and we have over 1 billion pounds of molybdenum in all resource categories.
Right.
If you take all the metal we have in the ground at today's metal prices for those four metals, on a per share basis, each one of our shares is backed by over $9,000 of metal in the ground each year. Now,
Yeah,
I get that you have to take into account what are the extraction
of
costs and
course.
time all your money and all that. But that's where the optionality leverage comes from, man. We
Right.
built our business trying to simply grow ounces in the ground faster than shares outstanding. And we've been doing that now for 26 years
Yeah.
successfully. We
Yeah.
have today we have over 1.8 ounces of gold in the ground per common share, plus all these other metals. And we're about to add in a meaningful way to that gold in the ground with what we're doing at the Iskut property this year. So, and if that's why you look at our share price over the long haul, since we started the company in October of 1999, our share price is up 6,000%, whereas the gold price is up about 1,000%.
Yeah.
We have definitely been the best performing gold company over the past 26 years relative to the gold price, blowing away the big names like Newmont and Barrick and Kinross.
Yeah.
We have a few slides there that shows and explains why we think that is the case. They've lost the concept of per share metrics. It's all about size, getting bigger but not
Yeah.
better. And they've underperformed the gold price in a very, very meaningful way over the long haul.
Badly.
People buy a gold stock that, okay, I'm buying this stock. If gold is up 10% next year, I expect that share price to be up by more than 10%. We've delivered that now for 26 years. Newmont, Barrick, and Kinross and others have not. They've actually underperformed the gold price in a meaningful way, which is remarkable when you think about it.
Yeah. Well, like I said, folks, Seabridge Gold, which I followed almost since that inception back in 1999, used to love it as a trading vehicle because you always had a lot of volatility versus a gold price. But for quite a while now, I've said this is not something you trade. This is something that's part of your core portfolio that you're in for the long run. You buy it when it gets cheap, you buy more of it, and you just like you do with a lot more than most of your investors do. You have a big slug of it and you sleep well at night. And so this is a great story, folks. The gold story is compelling. I'm just looking forward to bigger and better things all the time, and especially to see how things turn out with the summer's drilling. That's going to be fun to watch.
It always is.
Yeah,
I love getting my weekly exploration reports on Three Aces and also on the Iskut property.
yeah.
I kind of stay up late Sunday night just so I can read them.
That's fun stuff. All right, well, folks, here on the screen once more is the contact information for Seabridge. Make sure that you spend some time, if you've never done it before, on their website. Look at the links that I've added to the show notes here, a couple of past conversations with Rudi and a recent one where he went into the company in a much deeper way. And just stay in touch with yours truly as well. We're going to have some more gold-centric stuff over the near term that's going to tie up a lot of these thoughts and a lot more along with it. So, Rudi, till we meet again, which won't be too long, I think I'll see you in Colorado in September, if not sooner.
I will be there at the Denver Gold Show. It's a great
Yep.
show to go to. Yep.
Yep. All right. Well, you take care.
All right, good seeing you.
All
Take
right,
care.
bye.
For much more of the National Investor's cutting-edge content and actionable investment opportunities, make sure to subscribe to Chris's free content at nationalinvestor.com. And don't forget to like this video and subscribe to this channel too. Thanks for tuning in, and we'll see you next time.